See how good Gerardo is? As soon as I said we're going to start, he hits the button. You are amazing, man. What heaven did you drop out of, Gerardo? Okay. So it's group coaching. Oh, I got the wrong one. We're doing snipers. Sorry. What day is it? Where am I living?
Christmas Day.
It's Christmas Day. Every day is
Yeah,
Christmas Day.
yeah.
It's like opening a present every day. Yeah, sometimes you don't like what you get, but all right, we're doing snipers group coaching now, not hedge fund. That's tomorrow. Did you know this? Stock, crypto, and options trading has large potential rewards, but also let's get some muting going on here. Gerardo. Stock, crypto, and options. That sounded like lift music. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. And all prices are in US dollars, unless noted otherwise. Let's take a look at the markets. Maybe my energy is a little better today because the markets did what I think they should be doing. So my humanity is happy that the rut has come down below 2000, which is kind of what I was thinking might happen. Not only was I thinking it, I was hoping it. I was a little bit attached, but this is the reality. So let's get detached and let's react to what's going on. The rut came down. Pretty much everything did. Let's look at the SPX. I'm going to stay with the cash settle indices. I'm not going to go into Tom Stools just yet. I like the SPX because it's the S&P 500, and it is sort of considered the bellwether of the market. It's the index that most consider as the overall movement in the market. It hit the 200-day average almost to the point. The high of the day yesterday. Hold on. Let me look in the right place. 4325.28. The 200-day moving average right here, the purple, as I put my line on it, the purple was 43.26. So it just barely touched it and then has come down a little bit. So that moving average is so significant, and it is self-fulfilling. Let's be honest, the 200-day average is a self-fulfilling moving average. It is a strong, strong moving average. Institutions use it as buy and selling triggers, and then and all of us do. It's a strong resistance level or a support level because that's what we say it is. It's self-fulfilling, and it happens all the time. In this case, the 200 hit, and now we're pulling down. Now, will we continue down? Who knows? I have no idea. I don't know. Does anybody? If you know, let me know, please. I'm not sure. I think we have a lot of reason for a correction given this meteoric rise in the face of rising interest rates and recessionary fears and wars in the Ukraine and lots of stuff that is negative typically for the markets. The markets have risen, so it makes a lot of sense that we get some level of a pullback. But I've been very surprised during this last month, and I'll probably continue to be surprised like the rest of us. Let's take a look at the NASDAQ. NDX is the NASDAQ 100 index, and it hasn't quite reached its 200-day average. And then the DJX is the cash settled Dow Jones Industrial Average. Now, contrary to the others, the Dow is still currently above its 200-day average. Here and here, it breached and fell back away, breached and fell back away. Now, what are we doing? It bounced off it this morning, or intraday, I should say. It bounced off the 200. So we're still there. I don't know. I wouldn't venture to guess a direction anymore. What I'm going to do is to continue to hit the bell that if you want to trade successfully, it's about detachment. Being able to trade in the same fashion that you traded when you were doing back testing. And what I think about you all a lot. And after the calls, I'm always thinking about our group. And what I'm noticing, and probably because I do it, is gunslinging. I see a lot of, right out, off the hip adjustments. And really, the traders, the outcome that you want is to be detached and to simply react and follow the rules that you proved in your back test, 100 back tests, 50, 25, I'll say, 25 live paper trades in a simulated environment, preferably, or one contract if you don't have Thinkorswim, which is a pretty decent simulated platform. And then go right into a live environment and ease up. Start with a few contracts and start to roll up. Use your spreadsheets. You got to be using these spreadsheets. I don't think many are. I'm coaching a few of you right now, and I know that a handful are. But you want to get into these spreadsheets and start to put a structure around your trading. And so I'm going to do a better job of, standing here, standing in rules-based trading, standing in before you do anything live, backtest it, including adjustments, including iron condor, broken wing adjustments on credit spreads. All of that should be backtested first. The goal you want is to be detached and to react. And your number one job is risk management. I was in a trade today and I was like, man, I can try to eke out a few more dollars in this trade, but it looks like I'm going to lose more money if I wait. But I was tempted to go to battle and try to, and I was even going to take on more risk in exchange for maybe making a little bit more. That is not detached. That is like, I'm greedy. I want to get some money back. It's much better to just shut that thing down and go find that money that you were considering making on a crappy trade, trying to resuscitate the dead, trying to pull money out of a dead trade, when you could go to find a really nice trade and have a better shot at making money there. So that's where I'm standing, and I'm going to continue to do it. I'll do a better job of it going forward. And I'm going to be asking you, if you come up with these adjustments and you post them, I'm going to say, have you back tested this? I want to hear that you've tested it. All of you have a history of, a back testing portfolio for everything we're trading here. So go back and take your losers and experiment with adjusting. So that's what I want to say to start. The markets are crazy. They're dropped a little bit, but this one day doesn't mean anything. We could take a look at UUP just quickly. UUP is up slightly today, very slightly. Gold is down more than it perhaps should. It's dropped harder than the UUP has risen. I don't know what that means. I don't know where gold's going. It's really kind of at this stage, it's tied to UUP, but it seems to be dropping a bit more than it should. Oil, USO, yeah, it's just hanging out above the 200-day average. I don't have a prognosis on oil. It's not a strong sector. It's not a weak sector. It's just hanging. Bonds, TLT, sideways. It is dropping a little bit. We could deem that because of the interest rate hikes that are coming, the next Fed meeting. How much they're going to be, we don't know yet. There's a Jackson Hole meeting coming up, and people are worried that the Fed is going to come in with a big hawkish stance. Inflation is really not abating yet. It stopped increasing on the CPI last week, or the week before. The CPI didn't increase for the first time in months. It was expected to increase a little bit. It didn't. So the consumer pricing seems to have leveled. So all of that's what's going on. And I'm not really tied to an opinion about direction. What I want to do is just react to what we see and keep the emotions at bay. Now, this is your call, but I do want to talk about a couple of things. The first is, let's see, this is our performance, and we're doing pretty well across the board, except for two trades. The RUT trade, we could also look at the GM trade as well. I want to talk about the RUT, and I also want to talk about Walmart. Now, I actually did an adjustment on Walmart, and I'm going to show you the one that we could do today. It's the same adjustment that I did. I think it was Monday. I did it Monday night or Monday afternoon. And so let's start with the RUT, though. Now, on the RUT, we have this losing bear call spread. We sold the 2000. Let's take a quick look at it. now we don't have the latest data. Please know that the RUT data doesn't come until later tonight or first thing in the morning. You won't see the RUT data in Tom's tools until tomorrow at 10 Eastern. But we do know that the RUT is now at 1987. It's 13 points beneath 2000. So now the stock is in this area here. Okay, so holding, we held. My suggestion and the way I'm handling the trade is I said, let's hold. And while we're holding, let's throw on 2 broken wing butterflies, one bullish, one bearish. Here's the bear. The bear's made 45 bucks. The hedge, the bullish hedge has made $88. So we've got these 2 butterflies that are making us money. You know, if the RUT continues dropping, we're going to start doing better on our credit spread. We're going to take some of that loss back, and we're going to be making even more on this broken wing butterfly, the bearish one. And in the event the stock starts running up, we have a bullish one. This one is also in profit currently, probably because of IV rush. But look, now if the stock rises, then this broken wing butterfly will hedge off some of this risk up here. So we have 3 trades. We got the originating credit spread. It's now fine. The stock is now below the 2000 level, our short strike. Will it stay there? I don't know. But what I do know is if it goes down, I'm making money on the bearish broken wing. And if it goes up, I'm making money on the bullish broken wing. And when I feel like it, when I have a better feel for where the market might be going next, I think it might drop. There's a very good chance of it dropping. So I'm going to let this ride. And if it goes up, we'll make some money back on the long-term, not the long-term, the broken wing butterfly, the bullish one. And then eventually I may decide to bat down the hatches. So that's an approach. Let me pause for a sec and let's just check in with all of you. And does anybody have any observations or additions to what I just shared with an approach to put broken wing butterflies around these losing credit spreads and give yourself more time? Dave, your hand's up there. I'm going to assume that you want to say something about.
No, it's much the same what you just said, actually.
Say, pardon?
It's much the same as what you just said, really, about trying to cover that situation where the market is so wild that you react to the situation, but the situation might have changed 6 hours later.
Yeah.
You know, but again, the broken wing butterflies, you know, that you're reiterating is just the answer, isn't it?
I think so.
Yeah,
I do. And you know, I'm actually I'm not actually in that trade with my own account, but as I'm watching it, you know, I'm always what I want to do as your coach, one of your coaches, is to really take a look at the psychology of trading. And when the psychology, what I feel with this trade on is I'm fine. I might lose money, it's possible, but I know I'm not going to get killed on this trade. I know I can batten down the hatches later and reduce the risk. I know I can make money on one of those 2 butterflies. I can adjust both of them. I can limit risk in either one of them. You know, it gives you a lot of peace of mind. And then you can detach more freely. Just detach. It's not like spinning in my head, oh shit, this RUT trade I'm losing $1,000 on the RUT. It's not even a consideration anymore. It's out of your consciousness. There's peace and confidence and flow. So I like that. This is kind of where I want to guide all of you. And if you like what you see, then what there is to do is to backtest it. And if you have questions about the process, we have the recording. We put those butterflies on last week. So that's in the recording. You can watch, and Gerardo's put this timestamps on the butterflies. You could just watch the process and then go back and find some of your losing credit spreads and back, you know, do some post-mortem and try them again with this strategy and see what happens. I mean, imagine that you did that and you discovered that you didn't lose on any of your losers. You actually made money. What would that do to your psychology and ability to detach? Yeah.
So Mike, what you're saying then is to trade what you see, not what you're feeling.
Yeah. No doubt about it.
Some great trader said that.
Yeah.
Escapes me.
Well, I heard it from somebody else.
Maybe it was Mike.
Yeah, well, I heard it from somebody else and ignored it for 20 years. So, you know, but it's true. It's really true. We're not going to lose $900 on that credit spread. It's not going to happen. It's just not going to happen. It can't happen, really. I mean, we're making money anywhere the stock goes. So, good. Robert.
Yes, I'm in IWN one contract live, but I actually got filled on some, I think both broken wing butterflies last night. I haven't had a good look because it's too early for me to see, but I'm been testing the Iron Condor, placing a put trade with this as well as butterflies. Not necessarily taking an equal amount of risk on the lower one because we're halfway through the trade. But anyway, I'll see how I go over the next week testing it.
Yeah, you probably made money on the bearish one while you were sleeping.
Yeah. Yeah, what did they have filled? I think they filled it open last night.
Oh, nice. Yep. Our morning or this morning.
Yep.
Excellent.
Yes.
Great.
Right.
Well, good. Let me show you something else. So now we got, let me find, I don't know if you can hear those howler monkeys. They're going nuts right now. All right, Walmart gapped. After saying their earnings are going to be crappy, they weren't. Cheaters. Stock gaps up. We should have actually adjusted here. But now this is where, if you haven't adjusted yet, this is where you're at. So what do? Well, you could batten down the hatches. And you could also start looking for a broken wing butterfly. So given that the stock is really well above the short strike here, the 135 call, the short call, what I think we should do here is risk mitigate this one. And here's some ideas. Step one, and this would be a good timestamp, Gerardo. I know you know that, but so first off, contract. All right, our risk drops. The original risk on this trade with one contract was $889. Contraction drops our risk to 616. Just this alone, we can only lose another $180 or so. So, I mean, that's still a lot of money for most people. So our risk is contained. And then the next step, there's a couple of them that you could do. One, you could just do the butterfly. That's the standard one. And two, we could also, I'm looking at, let's look at the stock chart quickly. The stock is 2 closes above the 200-day average. So let's assume that holds. It might not, but I'm assuming that's going to hold based on the great news. And then why don't we think about selling down here at 135? So here's an idea. This is something Paul got me really focused on. But look, we could also sell 3. Now the risk goes way up. Now that's really the first thing to note. The risk goes way up. You've got to be ready to handle the risk down here, which is why there's 10 points between 135 and 125. If the stock corrects, then I'm going to go ahead and lift up the 125 to 130 and squeeze out the risk. I did 3 of them, 3 put spreads to keep my risk contained up here. Here I'm essentially playing for a $67 loss on this trade. We're currently down $429 on Walmart. All right. But Walmart is not to be trusted. Our earnings are going to be really crappy. No, this is where they said it. Earnings are going to be crappy. We're going to lower our guidance. Boom. And then they announced amazing earnings and stock gaps. Okay, so it could gap down. And
Mike, isn't that market manipulation?
Probably not. They're not stupid. I mean, if they did that and it was manipulating data, the SEC would just really come down with a sledgehammer on them. So I think it might be walking a fine line.
It might be just dumb. They might just be dumb and didn't know their own control figures.
Could be. It could be. Well, what else could we do if we were worried about this happening again? Earnings is 2 days ago, so we don't have any earnings announcements coming up during the life of this trade. I wouldn't expect there to be any pre-earnings announcements until a month before. If they do it again, I don't think they will. So what about a broken wing butterfly down here? Why don't we do that? So I did a scan. I'm not going to waste time with the scan. I want to hear from you. So this is the butterfly I found on Walmart. And I just ran it just right out of the scanner. This is a standard, just so you know. I ran the standard bearish puts. And I'm looking at the one I looked at a few of them here. The one that I liked was the one right on the top. It's a 44-day broken wing butterfly. It's going to cost me $12 up top and potential reward of $288 on 112 of risk. So that's a nice little return on investment potential. And when I look at the trade, then, you know, if let me zoom in so we can see better. 110 to 155. 110, 155. So the way I think about these is this cost of $12 a contract is insurance. It's insurance premium. So now if Walmart, here's our 135 level, that's where we want the stock to stay above. If it comes down to 135, we're going to be able to hold for a little bit because that puts us in the body of the butterfly. If it starts to correct more, you know, of course, we're still looking at this trade. We got to protect this risk down here. We're mitigating it with this, and we're going to keep adjusting this. Let me take this out. We're going to keep adjusting this. We could always add more credit spreads up here. We can do a lot to manipulate the risk in this risk graph, but just in case the stock starts to drop from here and it breaches the 200-day average, which is probably not going to happen unless the market really tanks. But if it does, then we've got 35 here. That'll provide a level of support, and the stock should, if it does come down, if it fills the gap, it'll hit 35. And then from there, I would imagine that it would maybe dribble down back up. But I think this is a nice little range here. And this money here of $127 does begin to offset the risk. If I did 5 here, so I'm looking at the potential profit, the max profit with 2 days to go. And so here I could put $60 of risk up here. So I've just done 5 of them. $60 of total risk in the broken wing that can be managed. And if the stock drops, there's a nice $663 of potential profit right down in what's there. But you know, let's call it $600 or so of potential profit in that trade. That $600 does a great deal to offset the loss that we'd have in this area as well. Again, if this would be adjusted, we'd be doing adjustments on this too. So this is what I want to do here. This is the trade I want to put on. I'm going to. So let's place it. If it fills tomorrow, then I will track it. And I think it will fill. Let's go to butterfly expiration September 30. And middle strike,
Mike, if you put that trade on, you're not going to have a loss on your original trade. If it goes down to 135, your original trade is profitable or close
Yeah.
to it.
yeah, we're profitable, in this area here, we got profit. Yeah, for sure.
I'm talking about the original trade, which was the
The unadjusted,
bear call.
the original.
Yeah, that one.
Yeah, you could, if you wanted to, you could leave it as it is. The problem though, is the stock just had a bullish run, 2 bounces off the 200-day average. It could very, very well from here go up. I'm thinking it's going to go up. It could very well fill the
Okay.
gap.
Okay.
So I'm concerned about that. And the reason I adjusted the way I did was to greatly limit my risk up there.
So is this particular one on then? I don't think you've put this on, have you?
No, well, in my own account I have, yeah.
Oh, I see. Okay.
Yeah, but you can get this filled today. The slippage is tight on Walmart. It's very, very, very tight. So just let me show you the adjustments. I'll
Yeah.
post
Okay.
so you can all see them. Now, if you do this, note, your max risk goes up. I coach a few of you one-on-one, and I was talking to Clayton this morning, and we had a very solid discussion about that. I do it all the time. And the only reason I'm comfortable doing it all the time is that I'm able to manage risk. And I'm also keeping my position size very small in the beginning compared to what for me, it's a small position size already. So I'm not worried. But don't do it unless you feel like you have the facility to manipulate risk in the same fashion. Let me post these adjustments here. And I'm also going to give you the risk graph as well, the resulting risk graph, and I'll give you the butterfly as well. So here's the resulting risk graph. And then I'll tell you another thing, this is not the only way you can handle it. Some of you are doing adjustments on these credit spreads that are a lot more involved, I'd say, maybe even more sophisticated than what I'm doing here. I'm just showing you one way. There's more than one way to handle a losing long-term credit. And that's the benefit of these mastermind groups. There's a lot of smart people. All of you are smart. You can, share what you think. Get in there and play and share. And that makes all of us better, including me. I think my trading, I'll say this. I think over the last month, my trading has gotten better being in this group with all of you. It's energetic. It's really, the energy of it is palpable. I feel it. I feel like there's a mastermind, a higher frequency mind that's developing in this group. And, if it comes to fruition, I think it's just going to bring more success to all of us, more than you have already. So there you go. That's what I wanted to share in the first part. So let's say any other questions or comments about these adjustments. And I could also talk about the iron condors that we have on, which is another approach that I'm loving as well. Double wide iron condors, double wide trailers. Any questions? Let me check chat here. Hey, Gerardo, can you do me a favor, buddy?
Yes.
You see questions. Could you keep an eye on I know you're doing the Zoom, the Fathom too. But if you could help me with that, that'd be great. I'm just going to take a quick look. Andrew must not have a speaker. Projected by the company, prices reacting. So you're looking at Roku. So Andrew's looking at Roku. Okay, let's take a look at Roku. I'm not sure exactly what Andrew has in mind with Roku. Let's take a look. I see your hand up there, John. I'll be with you in a sec. Yeah, I think Roku could be a nice little butterfly. I don't see any directional propensity. I see the 50-day average right there. Doesn't want to get above that. Bearish broken wing butterfly would be beautiful on Roku right now, I think. Okay, let's go over to John McCaffrey. What country are you in, John?
Still in Australia, Mike, but in the process of transitioning to Spain. We've got we've moved away from our home in Noosa, and we're in a small apartment to the north of Noosa, and we're heading to Spain at the end of September. So we have to get used to being in small apartments for a while. You know what it's like.
I do.
Mike, you asked me to go over the butterfly that I put on NVAX, Novavax,
Yes,
which was a train crash trade.
Mhm.
So I'll just hit share screen. Are you able to see that?
We have it.
Okay. On the 11th of August, post earnings, it had a dramatic drop down 30%, or was it actually the 9th of August, is it? Anyway, on that day, towards the close, I looked at, because it dropped around to around $40, I looked to a standard butterfly August expiry, 35, 40, 45, and it was about $1.25 to enter. But I decided not to try and enter it before the close, on the off chance that the next day it might do a Walmart and have a rebound. So I waited off, but the next day it tracked pretty much the same. So I had a look at putting the trade on, but the price had increased fairly substantially. It was up around $1.49, I think. So I wasn't prepared to go into it at that rate. And I put on a good till cancel order at roughly the same amount. I think it was about $1.26, $1.27. And I really didn't expect it to get filled, but it did get, pardon me, it did get filled on the 11th. And since then, it's tracked within pretty much within the break-even lines, but it was starting to spike above the upper break-even, although not closing above the upper break-even. And in fact, during yesterday's live coaching call, while you were talking, I was trying to close it out because of this uptrend in the last few days. But curiously, even though the volume's quite good, I wasn't able to get a close in. Even at times, I think I was about 7 cents under the midpoint. So as it turned out, fortunately, it didn't happen. I didn't get filled yesterday on the close, because today, as you can see, it's had a nice downtick, and just before the close, I closed it out. So it should be around, it'll be over 100% profit.
Beautiful.
Yeah,
I just checked the news, and the reason that Novavax is a COVID, they have a COVID vaccine, of course, and the Biden administration could stop buying COVID-19 vaccine treatments and tests this fall. So I think that was the reason for the fall today.
Well, I must send a note to the White House to thank them for the timing.
I tell you what, when I was when Trump was in, he was messing with China, and he was playing hardball. He played hardball on Friday. He was going to put all these sanctions and tariffs on Chinese products and stuff like that, and the market tanked. And then on Monday he goes, I'm just kidding, and the market gapped back up. And I lost money a few times because of his machinations. And it's nice to see a president give you a piece of news that helped you out.
Yeah, long overdue. The other comment I wanted to make, Mike, regarding your insurance broken wing butterfly trades, way back when I had the AbbVie put credit spread, which had gone against me, that I talked about previously, I was trying to place broken wing butterflies as insurance, but I couldn't find one using pure bearish and you're using the pure and standard radio buttons. What I didn't do, which I've since learned, was look for an alternate stock or index that could have been closely correlated, as you've done with the XSP index on the
The rut.
on the RUT. Yeah,
Mhm.
yeah. So that's a lesson for me to keep in mind for the future.
Yeah, awesome. That's why we have this mastermind. Excellent. Well, good job. It's always nice to be lucky, you know?
Yep. Yeah. Yep. Luck had a big part to play in that one.
Yeah. There's some, you know what I could do now is, this is really technically not a sniper trade, but what I'd like to, I want to give you an idea. This is something I did on the BITO trade. We'll talk about this one tomorrow, but I started with a balanced butterfly. And then when the stock started to dance with the upper break even, I split the short strikes. I lifted up half the short strikes, and I created a matador. And that's something for the future. And if you'd like to practice it, I think it would benefit everybody. So you had that trade when you tried to get out of it because the stock was dancing with the upper break even. If you could take us back to that date, I want to show you a potential adjustment that could have given you a wider set of break evens.
Just on that, yesterday I was also playing with reducing the risk on the upper spread.
Mm-hmm.
That is dropping the 45 to about 42.
Mm-hmm.
And that essentially eradicated the risk on the upside, but of course increased it on the downside. But at that time, I didn't think the stock was going to have the drop it turned out today. Again, another thing I'm glad I didn't do. Okay, I'm sorry, Mike. Where do you want me to take you?
Yeah, go back one day if you would.
Okay.
And then what you just said is what I'm going to do, but I'm not going to drop the 45 call. I'm going to lift up one of the 40 puts, one of the short puts to 42.50 put. I'm assuming there's
okay. So you want me to buy a 40 and sell a 42.50?
Correct. Which is a credit spread, by the way.
Yep.
So that puts more credit in the trade. This is precisely the BITO trade that I'm going to highlight tomorrow. This is something that I literally only started playing with 2 weeks ago. Now, this is hot off my press. So this contracts the risk in the upper. And then gives you, look at that thing. And your delta is also greatly reduced.
Yep.
So you have less delta risk. There isn't a wait a minute, what's going on there? It says there's no 42.50 put, unfortunately. Okay, so this is
okay.
It gives you a rough
idea. I could do a 42.
Is there a 42?
I'm pretty sure there is.
Okay, we can edit and see the strikes. Or even 43, one of those two, if they're 1 point strikes.
There's 42 and 43. You want me to take 42?
Let's take 43. We'll make it a little wider. Squeeze out a bit more risk. So this has the same impact of contracting risk out of the upper spread and widens it such that your probability of profit is better and your delta is greatly reduced. You got profit all the way up. You know, in the next 3 days, you got profit all the way up. I mean, you got all the way up to 48 or so.
And even with today's drop, you've still got a good profit.
Well, let's take it forward one day and see what it looks like. And then the other benefit of these is that if you really see in the stock is flatlining between the short strikes, you can let the whole thing expire worthless, let it go to expiration.
Yeah. Well, with the extent of the drop today, the profits come down. However, if it holds there, it's still quite a reasonable result for expiration.
Yeah.
But I'm glad I closed it out this morning.
Mm-hmm. Would have worked out better. If I almost said Bush, senior moment, if Biden hadn't, his administration hadn't threatened to stop buying COVID vaccines in the fall, the stock
It would have kept going up probably. Yeah.
Yeah. So, but that's a really good example, man. And you started with a balanced butterfly. I like
Yep.
those. I like doing that. Excellent. Good job. Thank you for sharing that. That's really beautiful, man. Thank you.
No worries.
Did I tell you that I ran with the Bulls twice, John?
Mike, you can have it all to yourself. I have no.
You know, I was saying that I've had 2 times in my life where I thought I was going to die. I really did. And then there was another one. That was the other one. It sounded like a good idea to go run with the Bulls, you know.
Yeah. How much had you drunk?
Well, I didn't. I went to sleep and I got up at 6. It starts at 7 in the morning. But everybody else had these white outfits with red sangria drenched in their, so they're drunk.
Yeah. Yeah.
And
So
we're
you can see the blood.
Yeah, you can't. Yeah, it kind of melds in with the wine.
Yeah.
And you're like this, and the streets are tight, and you can't move, and they fire off the rockets. The Bulls are coming. I was like, oh fuck, man, I'm done.
Yeah.
I really thought
it's scary.
Trouble. Yeah.
Scary.
Yeah, it kind of gives you a new lease on life. I probably felt the most alive. One of the times of my life. Afterwards, we went and got beer and had eggs and beer for breakfast at 9 o'clock.
It kind of parallels sky jumping and bungee jumping.
Have you done that?
No, I'm not that brave.
I was and I were about to go do bungee jumping in New Zealand. And we there was a road to turn down, and we said, no, we're not doing it. And we kept going. That one's scary. All right. Anybody got trades they want to talk about? Okay. Well, I'm your coach, so I'm just gonna ask if you're in action. You know, are you in action? Get in action. Bring your trades, even if they're paper trades.
Would you care to comment on short-term credit spreads?
Yeah, I'll look at one for you.
I don't have a trade, but with the market doing such weird things over the long term, short is even weirder.
Yeah, this is definitely not. Now,
Mike, just on that, I looked at a bull put credit spread from the Scran on KWeb a couple of nights ago, and I used Matt's approach of turning it into an iron condor.
mm-hmm.
So I ended up placing an iron condor at roughly the same on the risk graph, roughly the same distance outside of the upper standard deviation as I was below on the put side.
This is short term?
No. It's long term.
Okay.
Yeah.
Okay.
Yeah.
Well, since you mentioned it, and by the way, you guys got to get in motion and bring trades, get in the game. This stuff works, but you got to play. So please come to these with trades, with ideas, with some energy, and jump in. This energy is delicious, and you're going to enjoy it. John, we have currently 1, 2, 3, 4 long-term iron condors. Here they are, winner so far anyway, and they're all doing great. The one that I put on first was August the 1st, and it was Newmont Mining. I found the long-term bearish credit spread in the scanner. And then, like you just said, John, equidistance, put the put spread underneath such that both the short call and put are the same distance away. 45 was the stock when we placed it. And so we had 10 points above, 10 points below, and a balanced broken wing. I'm sorry, that's just etched in my brain, broken wing. Double wide credit here, double wide credit here. This gives you so much more opportunity to adjust. Now, when you do it, the reason that, so here, Newmont came out and said, I'm repeating, I know this is just review for those that don't remember or didn't see the first first time I spoke about it. But Newmont came down and said they're going to cut their production, their gold mining production. And then the price of gold was rising. And so there was positive and negatives that came to bear. And as we predicted, the stock has just gone nowhere. So this trade has a potential profit of 15.47%. Currently, probability of profit is 84.6. We're going to make money on this one. And the basic adjustments are, if the stock starts rising up, contract the risk up here, squeeze it out, take your profit, and you're winning. The opposite credit spread is going to be winning. So you take your profits here and you lift up the credit spread to a butterfly or something underneath, like I did on Walmart just now, and get some more credit. You can manage these things a whole lot better. And then on top of that, throw on some broken wing butterflies. Checkmate this mother. Checkmate. You can start right now. Bullish broken wing, bearish broken wing. If you can't find a trade on Newmont, find another oil mining company, or find a index that's correlated. And you can just, I've gone through that process. It takes a bit of extra time for sure, but you can do it and checkmate. The game, the people that win this game lose well, or don't lose very often. And that's what we're creating here. So all the other ones are doing well too. The Apache, this is an oil company trade. Come on. Yummy. Currently 82% statistical probability of profit. Double wide credit spread on top, on bottom. It's doing great. How about the next one on United Health? Different sector altogether. Healthcare. Yeah. Now it's at resistance. Nothing to worry about. Our credit spread down here, our put credit spread, because the stock's risen since we got in, we sold that underlying credit spread. Let's just round it up to $1. We spent $1. Currently, we could buy that credit spread back for 40 cents. So we've made 60 cents already on this credit spread. So it's helping us. And then in the event the stock breaks above resistance, starts to make a run up here, I'm not going to be in any hurry to do any adjusting. Then we take this credit here and collect the profit. We already have a 60% profit on the trade on just that credit, and then lift it. Do ratios, to sell a few more like I did on Walmart. Lots and lots you can do. This is what you should be back testing if you're liking the long-term credits. And by the way, Bernard is a master at this. Bernard, I thought you were on vacation, man.
I'm back last week.
Oh, you're back. Okay.
Yeah. So last week, the end of the week, and so I'm starting the clearing again this week. The trading was in North Spain.
How is that?
A Coruña, all these regions. It was not too hot. It was between 22, 29, and last days 33. But central Spain was very hot, 40, 42, 3 degrees at Madrid.
Yeah. Did you go to Pamplona and run with the bulls?
Yes. You know, it didn't run with the bulls, but you were in Pamplona, yeah. Lovrano also. And the Rioja wines we visited. And also Bilbao, the museum. Guggenheim, very nice. And yeah, along the coast, Kion. San Sebastian is a nice boating room, a place to visit, very big one. So lots of destinations, and also Los Picos de Europas. We went for long walks there in the mountains for 8-10 hours. 26 kilometers, very nice. Yeah.
Yeah, man, beautiful.
Yeah. Enjoy that.
Are you ready to start trading again?
But I'm starting. I already put one trade on the HFM, the other one concerning what is it? MRO, Marathon Oil. I found first the bullish broken wing butterfly, and on the other side I found the bearish one, but I prefer the bearish one. So this one I posted on your site of HFM. You can have a look if you want to.
Yeah, I'll pull it up here. You posted it under, I see
This
here.
evening.
Okay.
Yeah.
Do you have the risk graph you could show us?
1 second.
Yeah, let's take a look at your trade.
But it's
I see your hand there, Paul. I'll get you in a sec here, bud.
here it is. This is one.
Mm-hmm.
So basically, yeah, you want it to have it a bit bigger. There it is. Good return. And then it's increments of half points. The puts I prefer because you have here support becomes resistance, a little triangle. And if the triangle takes the same size down, we still in. And I thought of adjusting at what did I put in? 24 or 21, around that. That's one trade, and the probability is 33, and around 80% of not getting into the break evens. And the first, do you want to see the other one or?
Yeah.
On NRO. 1 second. This is the other one, and that's the one I found first, and then I always do the symmetry and looked at the other one you first saw. But I had the impression the last one was the best one. I could also have thrown these two in, but it's only for tomorrow starting of the market to enter the one. But you can take both of them basically. Yeah, if it goes up, you have it. If it goes down, you have it. It's a triangle.
Yeah.
Or what do you prefer of the two? Or this is.
Well, while you were talking, when you showed the bearish one, I went out looking for a bullish one, so I would do both.
You would take both of them.
Heck yeah.
Okay.
Absolutely. Then you got to deal with the broken wing risk, you know. So you got to be ready to contract that broken wing on the bottom, lifting up that 2350 call in this case to 24 if the stock starts dropping. So you still got to contain the broken wing risk because you got two broken wings that are overlapping, both of which have risk. What are your expirations the same date on both?
Different. This is September 23, 37 days for the lower one. It's a bit longer. And the other one is 23 days, 7-8 days short. So if it goes up and the last week comes down, we have two hits, huh?
Yeah.
But okay, you have to see what the market does, huh?
Yeah. Let us know when you know what it's going to do, would you?
Yeah, when it's moved. Yeah. Okay. Good. Do you
Bernard,
have any ideas to get it better, or to say watch this or that?
I like both of them. Now you got to adjust them though. You know, I don't know where the stock's going to go. Quite honestly, I don't know where oil's going. This thing's volatile. It could go either way. It's got resistance at 25 and support at 20 roughly. It's bouncing between those levels, and you know what you can do is as the stock bounces up in this case, you know, I don't think it's going to get to your upper break even, but you want to always you got two sets of risk to manage. You got double risk where the broken wings are. The smaller wings, and both trades overlap. So the two areas to concern yourself is, number one, if the stock just kind of hangs out sideways, you got to be ready to contract the broken wings to squeeze out the risk in the middle. And then if the stock runs up, you make money. If it runs down, you make money. If it runs up too far, then you've got to contract the upper. If it runs down too far, contract the lower. So there's really three places to focus your attention: the upper risk wing, the lower risk wing, and the two smaller wings in the middle.
Yeah. So if it goes to the middle, I should take the risk out of the both of here. This one.
Well, you want to manage them separately. So based on what you think's happening, you look at this, like, for example, this stock starts dropping. And I wouldn't do anything until it drops below 20. I mean, it depends when. If it's later, yes, but you've got plenty of support at 20. If it breaks below 20, then definitely start contracting the risk out of this losing wing, and you're going to be making it in the other butterfly.
Yeah, the other one will be at, if we go to 20 here, it's perfect, perfect inside, huh?
Mm-hmm. Yeah.
Mm.
So the profit in this butterfly is offsetting the loss in the bullish one, the small wing. You're losing there, but you can control that risk a little bit, and then you're going to be making all that money back in the bearish one.
Yeah. So it's important to adjust in time so you don't lose too much on one side or the other.
Yeah, exactly.
Yeah.
One thing I want to show you, Bernard, we did this yesterday, and we have currently, I got filled on these two SPWR trades that we talked about yesterday in yesterday's call. So we have a bearish one on SunPower that's up 40. These were filled this morning, and then I've got a bullish one on the SPWR. And so if we look at both of these, I'm going to also overlay them. Now, these happen to be the same expiration date. They overlay much more nicely if they're the same expiration date. So the stocks come down, the IV's rushed in, we got a bit of profit here. So I want to wait to see what the stock does. If it starts to drop a bit more, then I'm likely to contract the risk out of here, but not yet. The stock came down, it's closed at the high of the day. I don't know where it's going to go from here, but if it continues to drop, I'm not going to be worried about this risk up here. So then I'll contract this 27.50 up to 28 or even 28.50, depending on how firmly I feel the stock's going to move down. And on the other side, this is the bearish one. That's going to, it's going to really, we're going to make more money here than we could possibly lose here. So when you overlay them, and these are the same expiration date, but what's cool is when you have two of them on, you can actually, and the same, you can also do it without the same expiration date. It's just, the risk graph's just not as useful. So I've got the bear loaded here, and I've got the bull in my folder. So I've got, there's the bear, there's the bull. I want to overlay the bull on top of the current bear. I click overlay, and this will give you the look of both. And so that's the two trades overlaid, but I can also pair them. And when I pair them, it gives you one risk graph. All right, now let me show you, if we take it down to 2 days, which is when we're going to get out, it's going to take the risk graph days down to 2. There's your risk graph. And what's cool about it, forget about expiration just for now. Look at red, green, and blue. There's the net risk graph of the two trades paired together. And this is not adjusting. The risk in this trade is right there. We can adjust that. That's the risk that's contained in the broken wings, and we can mitigate that. We can drop it by contraction.
Yeah.
So as we adjust these things, what you do see is risk at 2 days to go right here. It isn't much, by the way. It's what, $170 or something, $140. We could get rid of that, but we're not going to even get anywhere near that until 2 days. If we go to 7 days, 7 days to expiration, that's this green line. There's profit everywhere. Unadjusted profit below here, down to here.
Yeah, it's nice.
Yeah.
But the SunPower trade, the bullish one, I entered in the beginning of the morning, an hour in the market, and it was at the low of the candle you see there, the bullish candle, for 11 cents.
Mm-hmm.
I thought it was good. Yeah.
Yeah. But you really want to be focused on managing the risk in the broken part. because there's a bit of overlap.
Yeah, okay.
So I'm excited about that one. We're going to see what this does. I just hope it moves. You know, it looks like it's going to. I don't think it's going to go sideways from here with what's going on with, you know, the Green Energy Act that the Biden administration is pushing through. So
Yeah.
solar companies are going to benefit from that. That's what SunPower does.
Yeah, yeah.
All right.
It
Well,
looks like a
excellent.
good trade.
Welcome back, man. You came back with a vengeance.
Yeah, we rested now. We can start working again.
Yeah. Your trading will be better.
Yeah, sure. I do my best. Yeah.
You always do, man.
Yeah,
You always
yeah.
do. It's time to make money. Paul, you got a question?
Well, if I could just show something that I worked on today, just to a little exercise. So I had I hunted for condors, which I do. We don't have a button, is there?
Well, I posted some settings. You can use the Condor Finder. I posted those.
Okay, I remember now.
Yes.
I've got to look into that and see where that was. But I just found this one today using a searcher, and I found one side. I built the other side. And if anything, I thought no reason. But I just seem to be lately getting into some issues up here. And we talked about, because we manage trades differently, I had to look at possibility of putting something like this guy on up above. Would you do something like that initially? And if so, is that kind of in the right spot, or is it a little bit high?
Well, the first thing I don't like about it is the risk if the stock stays flat, which is 144 bucks. So if the stock does nothing.
Well, I chose 144 versus if the stock does nothing, I've got 308 on one side and 232 on the other side. So it is just an insurance policy. And then I did a few more contracts on it to do that. So and then the other step I did that I didn't really understand was and also these ones are at different strike dates. Because I couldn't find this, I just built it. So it's the strike dates. I've got October 21 on these guys, and then I chose September 16th. But I did a little overlay there just to see, and I do see that there's not much going on if it stays in the same spot. Anyway, just an exercise.
Yeah,
there.
I would you could also hit pairs here. Let's see what pairs generates for you. The expirations are different, so I'm not sure how it's going to look. Yeah, there you go. I mean, that's kind of what you're dealing with.
Yeah, I think maybe the butterfly was I wanted it to be up near that it would kick in and do something if it reached break even, but I think I might have been a little bit too high on that. Anyway, just an exercise, entered into a folder. I'll follow them along and see where we go.
Awesome. Looking forward to. I would back test it, try it out.
Yeah, no, I'm moving into back testing with a little bit more with butterflies.
Beautiful, beautiful. Let's go over to John.
I just wanted to ask Paul if he legged into that iron condor trade on Dow, or if he placed it as a one-time entry on the iron condor.
I'm only paper trading, and in order to look at them separately, I'm just putting them as separate spots. So it's not a trade that is live.
Okay, but you didn't
Tom's
get
tools.
you did. Oh, okay. You didn't get filled on a paper entry then.
No, I I live in a country that has is on the blacklist for just about everything. And just as we've been talking about different trading platforms, no, I cannot use Tasty or Thinkorswim or
Thinkorswim,
anything like that. I have Schwab, and I'm very fortunate, but it has no testing opportunities.
Yeah.
Paul, are you
Thanks.
living in the Caymans because you have to?
Who are all these people? No, as a Canadian, it's one of the few places in the tropics that we could easily move to, and anybody in the world can move there and work, provided that you get a job offer. There's population of about 70,000 people with, I think, 145 different nationalities in the workforce.
Wow.
People from all over the world are there. We've got a underemployment problem, and work permits are a big moneymaker for the country. But anybody could move there, provided you get a job opportunity, or in my case, start a business. So there we go. Nice.
All right, everybody. Well, I've got my one last class on the earnings is tonight, so I'm going to open the floor for any last minute questions,
Strangles.
shares, or strangles.
No, not for me.
Forgot,
Just somebody
forgot.
about earnings tonight.
Oh my God, I almost forgot.
You feel ya.
Oh my goodness. Thank you for reminding me. I totally forgot. I remember this morning, but it's not in my it's not in my agenda. So I'll put it back. I'll put it in right now. I'm going to put that in, Paul. I promise.
I watched the entire repeat this afternoon, so that's why I recalled it.
That's why you're, sure. I'm surprised you're not brain dead after watching that.
Mike,
All right.
this is Dean. I have one really high level question. I too use the Thinkorswim platform, and every now and then I see credits come in with negative numbers. I don't quite understand why they do that and why they don't say debit credit and just stick to positive. Have you got any feedback on that?
Let's just do a quick credit on Novavax, just for the fun of it, and let me make sure I understand what your question is. Let's just say we want to sell a 35. Let's sell this one. Slippage is terrible, but it doesn't matter. Okay, so I'm not sure I'm following the behavior. I just did a credit and it shows a 47, puts the word credit underneath. If I was buy the spread, it would show debit underneath. So I'm not sure.
Every now and then I'll have Thinkorswim come with a negative number.
Mm-hmm.
It'll still say credit, it'll still say debit, but it'll be negative. And so I don't quite really know what that means. Maybe it's something I need to reach out to TD Ameritrade for.
Yeah, it could be if you're like, for example,
every once in a while too.
it's I would imagine, I don't think it rings a bell, but I haven't seen it in a long time. I'm guessing what it means is like, if you were to buy this put spread, buy the 38, sell, that's a debit trade. If the slippage is super wide, it's possible to buy it for a credit, but they're not going to let you do it. But sometimes you can see that, sometimes that'll show up in the slippage where the mid price is buying the spread for, it's a debit spread, but you get a credit. I'm assuming that's what it is. And if you see it, it's because the slippage is so gargantuan wide that you don't want to, and they're not going to fill you on a debit spread for credit. They're not going to do it. That's my guess.
Thank you.
But yeah, you're welcome. You can just go, I always use support here. You just go to support and they're quite good when they respond. And then you can call them as well.
I have found them very helpful when I call them.
Me too. I think they're really nice. So are the Tastywork people.
I've noticed that on my butterflies, though, oftentimes it'll show up as like a negative 0.02 credit, which is a three-legged trade. I wonder if that has something to do with it.
Sue, my internet cut out. I didn't hear that when you just said. Would you
Oh.
mind?
On my butterflies, which are three-legged trades,
Mhm.
oftentimes it'll say a minus point, say, 0.02 credit.
Mhm.
So there'll be the minus and the credit there.
Yeah, yeah, because
And
when
if you-
when you buy when you get a credit on a broken wing, you're actually buying a butterfly for a credit. So
Right.
that's, let me check here. Let me,
I mean, that's what it says on my broken wings. Whereas if I just do a spread, it shows up as a credit or a debit.
mhm,
Color code besides.
right. Yeah, let's see, it still shows credit though. Yeah, I would dig into support and see if they can answer that question for you, Dean.
Well, thank you. I will. Thank you.
You're very welcome. All right, everybody, good call. Tomorrow, 5 p.m. Eastern tomorrow, we're going to get into some more hedge fund stuff. We're going to cover our portfolio, which is doing really well. AT&T actually dropped into more of the profit zone, so that broken wing is doing well. I think it's up like 25% or something at the moment. So that portfolio is doing really well. We're not losing anywhere, which is kind of the point of broken wing butterflies. And it's working. All right. Thanks for being here, everybody. Sending lots of love. And we'll see most of you hopefully tomorrow.
Have a great night.
Yep.
Bye.
Good night, everybody.
Thanks, everyone.
Pura vida.
Pura vida.
Bye.